Welcome to Richard Suttmeyer's 4 and 4. 4 blips on my radar screen presented in 4 minutes or less. Today is Tech Tuesday, so my focus is on the tech sector and technology stocks. My first blip acknowledges that technology is the cheapest sector at 25.7% undervalued. Since the tech sector is the cheapest of 11 sectors, my sector report model portfolio is 10 tech stocks out of 24 portfolio holdings. There's at least another 10 qualifying names. Some names don't stay in the model portfolio for long. For example, I added Broadcom last Wednesday at 21.10 on an upgrade to buy according to Value Engine. Then over the weekend, the stock was downgraded to hold, and the sell at 23.31 at Monday's open resulted in a 10% gain. This illustrates my buy and trade strategy. My second blip is my weekly look at Apple and the mystery of iPhone sales versus AT&T activations. Apple traded as low as 126.14 last week, which was nearly retested at Monday's low of 126.45. On both occasions, my semi-annual pivot at 130.49 provided a magnet on a rebound. Apple saw a negative reaction to earnings last week, but the financial data was good enough to push fair value up to 173.39 from 169.60. This makes Apple 25% undervalued. My annual value level is 112.37, with my annual pivot at 130.49 and the 200-day simple moving average at 145.08. An issue for those missing iPhone sales is that Apple may be counting shipments as sales. According to the math I have read, Apple sold or shipped 3.75 million units. 2 million were activated by AT&T. 350,000 were sold in Europe, and another 750,000 were purchased to be unlocked. That leaves 650,000 on inventory shelves. Let's mix apples and oranges. Does this make sense? Before the open last Tuesday, and after the FOMC cut the federal funds rate to 3.5, down from 4.25, the Bank of America reported net earnings fell 95% in Q4, and this stock is up 24.4% since the open last Tuesday. B of A will have more bad loans in the quarters ahead. Then, after the close last Tuesday, Apple reported 58% growth in net income for Q4. The stock is down 16.5% since then. Things that make me go, My third blip is profiling Google before its earnings after the close Thursday. Google traded as low as $5.19 last week, down 30.5% from its all-time high of $747.24 set on November 7th. Google ended Monday 22% undervalued and below its 200-day simple moving average at 570.09. My fourth blip shows the daily charts for the NASDAQ and Philadelphia Semiconductor Index, the SOX. The daily chart for the NASDAQ is no longer oversold and is in a trading range set last week between 2202.45 and 2408.22. In between is a 200-week simple moving average at 2249 and this week's resistance at 2371. The daily chart for the SOX is also no longer oversold. The trading range set last week is 334.29 to 369.98. In between is this week's pivot at 355.08. Send your comments and questions to support@rightsideadvisors.com. That's today's 4 and 4. Enjoy your day.